Netflix stock has been absolutely crashing in the past couple of months, down 37% in the past 6 months, and now the stock is trading near its 52-week low of $75 per share. However, if we take a look at the chart, the stock skyrocketed from $18 per share all the way to $132 per share. So let's see if the stock is about today. Now that the market cap is $229 billion, analysts have them rated as a buy with 52% upside, and they are currently trading at a 4P of 24, although we'll talk later about the valuation with the discounted cash flow model. But let's start with their financials, because Netflix financials have been amazing. They have grown their revenue from $8 billion to $45 billion over the past 10 years, and they have seen a re-acceleration of growth in the past couple of years, growing at around 15%, which is huge. Now, as far as their profit, it has also seen amazing growth regarding net income from $186 million to $10.9 billion. They have a bit less free cash flow, but nevertheless, it's almost the same, currently at $9.4 billion, and their margins are also amazing. Gross margin is currently at 50% and has been increasing over the past years. Profit margin is currently at 24%, and free cash flow margin currently at 20%. If we take a look at the top streaming devices by subscribers, Netflix is the #1 platform. Now, there is an ongoing possible deal that Netflix will acquire HBO Max. In that case, Netflix will be the #1 even by a larger scale. But either way, I have another videos on my channel going more in depth about the deal in case you want to check them out. Another thing that I consider important for Netflix growth is its revenue by segment. As you can see here in the chart, it is growing in the whole world. In the US and Canada, currently $19 billion of its revenue, Europe, Middle East and Africa $14 billion, Asia Pacific $5 billion, and Latin America $5 billion. I think there is still a lot of huge opportunity in Asia Pacific and Latin America, because as those countries get more developed, Netflix is going to capture more subscribers. Another positive about Netflix is its balance sheet, as they have $9 billion in cash and $16 billion in debt, which is manageable for a company that has a market cap of $329 billion. And now let's jump into the valuation, which is always the most important aspect. By the way, if you want access to stockanalysis.com, which is where I've shown all the data in this video, you have my code in the description. And in order to calculate the intrinsic value of the company and potential future returns, I use my Google Sheet, which tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. And the intrinsic value according to my low assumptions is $47 per share, middle $61 per share, and high $80 per share. And because the stock is currently trading at around $78 per share, it means that if my low assumptions occur, you would get a 1.1% annual return on your money, middle 5.8%, and high 10.5%. And therefore, we can conclude that according to my assumptions, the company is a bit overvalued at the moment. Now, as far as them, I have Netflix growing revenue between 7 and 11% over the next 7 years, and averaging a profit margin and free cash flow margin between 23 and 27%, which I think is reasonable because, for example, if we take a look at what analysts are expecting for the company, they are expecting Netflix to grow at high single-digit or double-digit revenue growth for the next 5 years and reach $76 billion in 2030. And as far as profit, high double-digit revenue growth from $3.20 per share all the way to $5.95 per share. Now, as far as the rest of my assumptions, I assigned the PM price to free cash flow at the end of the 7 years of 16, 18, and 20. But if you want to make your own assumptions, I'm going to leave a link to a spreadsheet down below. Super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. And in my opinion, this is an example of a company that, although it is cheaper, doesn't mean it is cheap. And I don't know if we're going to see Netflix back at around that $50 range, which is where I would be interested. But either way, I think Netflix is a fantastic company that has amazing fundamentals and that is going to keep growing, just a bit expensive at the moment. I hope you found this video valuable. Let me know what you think about Netflix stock in the comments, and I'll see you in the next one.